Last week we saw the Bank of Canada lower their overnight rate by 0.25% for the second time since June. My video released last week asked the question, did mortgages go down? In that video, you can see the link here, I explained what actually happened to the Canadian borrowing mortgage rates. Our next Bank of Canada announcement will be in September. The United States has just had a large financial drop in the stock market due to indicators pointing to a looming recession, leading to shareholders bailing out of the markets. Is Canada also leaning in that direction? Will the Bank of Canada's next rate decision be affected by this? What's going to happen, and how can you determine how this will affect your mortgage? If you want answers to all these questions and more, then stick around. Hi, Gary here. Let's jump right into some of these questions. Will Canada be entering a recession? The Canadian economy is heavily affected by what happens in the United States, as they are our largest trading partner. When they quit buying our products, then our economy is affected. We can expect that a recession in the United States will affect Canadian economy. Second, the high bank lending rates has caused the house sales to plummet over the last year, which is the worst that I can remember, and neither sellers or buyers are jumping on the bandwagon to get deals happening. Sellers are hoping, or should I say praying, that home sales prices of 2021 and early 2022 will materialize. Buyers are also praying that prices will continue to decrease. However, sellers do not agree, and although prices have dropped some, it has not been nearly as much as many buyers would have liked. On the side, I will suggest that by the time you think you see the bottom of the selling prices, that it will probably already be too late, as many people will have jumped into the market to purchase, and this will quickly drive up prices in home sales. Every realtor knows that when a property sells for a particular price, and especially a higher price, that all comparable homes in that area will now be selling at that price or even higher. The snoozers are the losers. Many buyers are waiting to see what the next Bank of Canada rate will do, and so are on hold. I personally do not think a 0.25% or even a 0.5% decrease in the long run will make that much difference. And later in this video, I'll show you how you can determine this. If the purchase price goes up $25,000 or $50,000 while waiting for a lower mortgage rate, then this may cost you a lot more than a small rate decrease and the amount you saved compared to the increased purchase price. If we could only read the future, wouldn't that be great? Unfortunately, we can't, so we have to use our best analysis instead. Lastly, both small and large businesses are heavily affected by the lending rates. With over 2 years of very high rates, all businesses have had to make tough choices in how they spend their money and how much they borrow. This pressure has slowed the Canadian market down, and in my opinion, we're not very far behind the United States in a recession coming. So, if a recession is coming, what will happen? Well, just the opposite of what the rate increase did. The Bank of Canada is tasked by the federal government to set the rate policies to stabilize the economy. The federal government felt that the inflation at around 8% was just too much and hurting all Canadian residents. By increasing the lending interest rates, consumers just had a lot less money to spend, as much as now going to pay for interest increases and payments in our mortgages and business loans. And consequently, this put a huge brake on the rapidly increasing inflation. The purpose was to lower the inflation rate from around 8% to around 2%. This did seem to work with the inflation rate down to around 2.8%. And if you take off the effects of the home mortgage increased interest costs and payments, then the inflation rate was under 2%. At this point, a number of months ago, it might have been prudent for the Bank of Canada to drop the bank rates, to take the mortgage pressure off us homeowners, and to allow businesses to borrow more money to improve their productivity and give a boost to the economy. And that is exactly, in my opinion, what's going to happen next. I am predicting that the Bank of Canada overnight rate will decrease by at least 0.5% in September. With Canada following the U.S. faltering economy, our leaders need to take immediate action, and lower the lending rates is a powerful tool to lead us out of a recession. A recession in Canada is really not great for anyone, and I believe after the Bank of Canada being so slow in responding to changing inflation and market conditions, that the Bank of Canada will now make a significant reduction in the overnight rate to direct lenders to lower their rates to give the economy a kick in hopes that we can delay or eliminate a recession in Canada. I think that we will also see at least 1 or 2 more rate reductions after September and before the end of the year. Wow! If I'm correct and we see another full 1% drop or more by year end, will this cause the housing market to warm up? Well, I believe that it will exactly do that. buyers will now be at 1.5% or more lower in their borrowing rates and will be able to more easily qualify for mortgages and will be able to borrow larger amounts of money. This may quickly dry up the surplus inventory of homes for sale now, and when this happens, will push selling prices up. This is good for sellers, but not so much for buyers. My recommendation is to have all your financials in order and work with your realtor and really stay on top of the market prices and activity so you can instantly jump into your purchase when you find that perfect home before the increasing prices overshadow the mortgage loan rates you might be able to get at the time. So you may be wondering how much a difference of 1.5% rate decrease will affect your monthly payments and the amount that you can borrow. Following, I'm going to go through an example using a free Canadian mortgage calculator on my website to show you how 0.25% and 1.5% reductions affect your monthly rate and payments. You can use this for your particular situation to figure out how much difference a reduction in the lending rate will affect your payments and purchasing amounts. There are many sources of mortgage and financial calculators on the web. I have a number of these free to use on my own website, so please use them. You can jump onto my website at GarySimsVictoriaHomes.ca and select the Valuable Resources menu option, then the Calculators menu option. Make sure to scroll down as there are a large number of different calculators here, and feel free to try various ones out. The link is also in the description below this video blog. Note that the bank mortgage payments, interest and amounts calculated may be slightly different depending on how they calculate the compounding periods within the mortgage. Not all lenders are the same. I will walk you through an exercise to see what mortgage amounts you can borrow, and as well look at the rate decreases of 0.25% and 0.5% and see how this affects your payments. The first example is a 5-year uninsured fixed rate. Let's assume you are buying a townhome for $800,000. You have 20% down of $160,000 and you need a mortgage of $640,000. We will try various interest rates. To open the mortgage calculator, do the following. Go to my website at GarySimsVictoriaHomes.ca. Click on the menu item Variable Resources, then click on Calculators. Scroll down and select the Canadian Mortgage Calculator by clicking on the Calculate button. This calculator assumes semi-annual compounding, which makes the effective rate a tiny bit more than the interest rate. For the loan amount, enter $640,000, and for the interest rate, let's start with 5.14% year fixed insurance rate. For interest rate, let's start with a 5-year fixed insurance rate. Type in 5.14. For length of mortgage years, enter 25. Now press the Calculate button, and this shows that the monthly payment will be $3,773.45 for 25 years or 300 payments. The total amount paid will be $1,132,032.63, and the total interest paid will be $492,032.63. Now let's reduce the interest rate from 5.14% by 0.25%, which is what we think Bank of Canada's next reduction will be. This assumes the bank changes their rates at the same amount and around the same time as the Bank of Canada does. Not all banks will do this. The new rate is calculated at 4.89%. Enter the new 4.89% interest rate and leave all the other settings the same. Then again, press the Calculate button. The new payment amount is $3,682.30, or a saving of $91.15 per month. The total amount paid and the interest paid is reduced by $27,343.54 over 25 years. We can see that on a mortgage of this size, that each 0.25% reduction will save you an average amount of about $1,093 per year. Just for fun, let's suppose that the rate comes down the full 1.5% over the next 8 months, as predicted by some. This would reduce the 5.14% rate to 3.64%. The payment would be reduced to $3,242.81, which is $530 and change lower, with a 25-year saving of about $159,191 in interest costs, or about $6,368 per year. It is amazing what a small interest change does to the savings. You can play around with other amounts and interest rates. On the same calculator, you can determine how much you can borrow based on a monthly payment amount. Let's assume that you can afford $3,000 per month payment on 5.14% with a 25-year period. So do this. Click on the drop-down on the first row and select monthly payment and enter $3,000. Second, enter interest rate at 5.14%, enter the mortgage length as 25, and then press the calculate button. In this case, you will see you can afford a mortgage of about $509,000. Now let's try it at an interest rate of 3.64%, which is a 1.5% lower than currently, and which we're predicting could happen over this year. You could then, if you put in the number, afford a mortgage of about $592,000. There are other factors that banks consider, so affording a $3,000 per month payment might not be a guarantee that the mortgage lender will lend you the amounts shown here. This just calculates that if you were approved that these amounts would be doable. There are a bunch of other calculators on my website, so feel free to use these to understand the various options for mortgages and other payments. Some other mortgage calculators include biweekly payment, mortgage payment table, calculators showing each month principal and interest portion, car lease calculators, tuition savings calculators, rent versus owning calculators, and many more. I am happy for my clients to point them to good mortgage brokers that can do the actual assessment and approvals for your mortgages. Remember, before you can buy your dream home, you need your financing in place. If you think this video was helpful, then you will want to take a look at the many free handouts you can download from my site with all kinds of useful real estate advice. And as well, here is a playlist for those who are considering downsizing in the next year. Thank you for watching, and I will see you next time.